Thank you. We'll move to the first question, and as stated, we'll rotate, so Elle, you'll have the opportunity to answer this first. On the forefront of everyone's mind right now is the financial crisis that our nation is facing. I'd like you each to assess what the federal government has done so far, and how do we come out of this on the other side? What are additional steps that could be taken either by the federal government or through free markets that could help us in the situation?
Well, I think there's growing consensus about what got us into this situation, the excesses that we've seen in the mortgage industry, and how that has infected really the rest of the financial system because of the way in which those mortgages were repackaged and sold, and the lack of stability in that whole process, and the lack of regulation in that process. The fact that so many of these financial institutions did not come under the kind of regulations requiring capital to debt ratios and other kinds of things that were part of the rest of the financial industry. We have seen now the response, and I think it's been important that there be a response. I don't think we could just sit back and say we're not going to do anything. I can't imagine standing on the floor of the U.S. Congress and saying to all of those people whose pensions funds were at stake, all of those projects that were at stake, all of those companies couldn't get credit, saying to them, we're going to let it go, we're not going to do anything. And I appreciate the fact that the chamber was a part of a group of chambers that thanked those folks who had voted for that rescue package. I think we need to do more to bring the principles of that rescue back to the local communities in terms of protecting home ownership. All of you who are in local government, I know there are county commissioners here and city council members, you know what it's like to have just a few boarded up homes in your community, and what that means to the property values in the rest of the neighborhood, what that means to the stability of those neighborhoods. We need to have more of that focused in the local communities in terms of things that are creating jobs. We need to get back to the sense that the best economic stimulus is a good job, and that's why I've proposed an infrastructure investment plan that can help us restore and rebuild our employment and our jobs in the community, and at the same time create long-term benefits and long-term improvements that can help with economic development of the future.
Thank you. The bailout plan that came before the United States Congress was a very bad idea, but you need to understand the context. And again, my opponent came out and said that he supports President Bush's bailout plan. I oppose President Bush's bailout plan. I did in the beginning in the first round, I did in the second round, because the context is this. We began the year in 2008 with a $168 billion stimulus plan that we were told would calm the financial waters and was necessary because of the subprime meltdown. That didn't work. Next, we were told that $29 billion was needed to bail out a private investment bank on Wall Street, Bear Stearns. That didn't work to calm the waters. Then we were told a $300 billion bill was needed to bail out the Federal Home Loan Association with bad federal home loans. That didn't calm the waters. Then we were told $200 billion was needed to nationalize Fannie Mae and Freddie Mac with a secondary mortgage security because they were insolvent. That didn't calm the waters. After that came $85 billion to bail out the largest insurance company in America, AIG. After that, we were told we needed to have $700 billion. Surely that would calm the waters. Well, $700 billion didn't do it, and like Congress does in its worst possible ways, it added $112 billion in vote buying projects and ordered very expensive wrapping paper to be able to pass this bill. After that, AIG, which went on a big party one weekend, said we need another $37.8 billion, and now they need another $9 billion. And just this last week, Speaker Nancy Pelosi came out and said, now we need another $300 billion in a second stimulus package. The point is, over $2 trillion later, the stock market is still plunging down. And what it says is this: you and I will probably be long gone, and this package still won't be paid for. Who's going to pay the bill? Someone has to pay the bill, and this was not the way to do it. I'm grateful that I stood up against this administration, against this very bad spending bill.
1 minute rebuttal.
Well, I think it's important to remember again how this started and the Bush administration's role in this. Remember, the Bush administration came into office with the largest surplus in history and is leaving office with the largest deficit before we add into this rescue package. Representative Bachmann sits on one committee in the House, and it's the Financial Services Committee, and on the Investigations and Oversight Subcommittee of that committee. And one has to wonder what was going on, what was being said to us, what were we being told that was coming, how we should plan, what were the proposals that were there. I understand talking about how it wasn't perfect. Although I have to tell you, when you get yourself in a crisis, that's no time for ideological approach to governance. You need pragmatism, you need common sense, you need to be able to work together and move forward with solutions instead of just complaining. And while Representative Bachmann was sitting on the Financial Services Committee, she was talking to us about caribou in Alaska instead of what was happening to our financial institutions.
This started with Freddie and Fannie. All roads lead to Freddie and Fannie. If there's anything we've learned, the federal government should not create a private business and then say it's going to back up all of the risks that that business takes. That's what the federal government did and created a monopoly in the secondary financial mortgage industry. Second, it created the Community Reinvestment Act in 1977. And with that act and changes that occurred in the mid-1990s, lending standards, which were platinum in our country for 200 years, were relaxed to the point where people put zero down on their homes and just stated their income in what were called liar loans. Time after time, we had our financial services chairman, Barney Frank, and also Chris Dodd on the Senate banking side, block reform. Reform efforts were brought up time and time again by Republicans over the last 8 years, and they've been blocked time after time by Barney Frank and Chris Dodd. This problem, people knew it was going to come, but it's been blocked time and time again by Democrats. We've called for reform from Barney Frank. He has refused, as the chair of our committee, to block reform of the Community Reinvestment Act, and he's blocked reform on Freddie and Fannie.